I'd like to see us testing that one more time. We've done it a few times recently.
Figured it out.
But by and large, we've held below the 200 for most of the last part of, I don't know, 2 or 3 years, with a few spikes up through it. So do allow for that. Even though the 200 has held us down, we do get these occasional forays to the other side. And we had one recently, actually, with the bomb raid on the Iran nuclear facilities. So it's not, and we had one just after that, a little bit of a, you get these echoes in the market, like a reverberation, you know, like that. This is what that is. So big move down and then the echoes. And yeah, so I think we could get back up to the 200 right there with my red arrows, but allow for a move up to about $68, $69. I think that's probably the top if we do get there, but also allow for a much higher move up above this area here into that order block, maybe for a double top. Yep. I think any of those sort of scenarios are possible, but I think the most likely one is the red arrow that I got drawn in, but allow for, you know, higher moves. And if you have a hedging strategy, you can see where your hedging levels might be. If you're just trading it as a day trader or a short-term swing trader, use stop losses. Don't hold energy plays when you're wrong, because sometimes they can go catastrophically wrong and you'll end up holding a very heavy bag that you don't want to hold. So make sure that you trade these with as little leverage and risk as you possibly can. Be prepared to exit the market when you have got a decent chunk of profit. These markets don't travel in one direction. Oil, plenty of time to get in and out of trades, and always plenty of time to get back into the same trade, really. So if you got out of some of these shorts, you'll see there are loads of opportunities to get back in short at any time. So don't be looking to hold bags, take profits quickly, cut your losses, hedge your losses, whatever, or hedge with options, whatever your strategy is, and make sure you don't get holding back. I think oil's going down. I think natural gas is going up, but I think we have to retrace a wee bit on oil first before moving down further. We're still long on uranium, or long in mind rather. Haven't bought more yet, but I think we will be doing that either today on URA probably, or sometime next week. Looking for some support here, potentially a bigger dip, but we'll watch to see how that goes. And I think that's covered all the energies. We're long on lithium too, another energy play. Yeah, and I don't know if there's anything else that we need to cover immediately.
Well, we've only got a few minutes left. Do you mind if I just hop on with a couple of altcoins, just if anyone crypto traders, we've got something to prep for the weekend, sure. Maybe, is that all right? So just put my chart up for a second. There's just a question by Daniel. Firstly, Robert, good to see you, my friend. Haven't seen you for a while. How's the Sol trading going? And Daniel, good to see you too. How could Jackson Hole influence natural gas, WTI, and gold? It depends if they put the heating on, I suppose. I imagine there's other elements probably. Yeah. Which is going to influence that, India, etc. But if we think of anything, we'll let you know. But if we could put my charts up back end, that would be great. Thanks. Sorry, I said the word I shouldn't. I got caught saying the B word.
You did.
Hey guys. There you go.
They're called the super team. The super team.
The super team. They are the super team.
Yeah.
For sure.
Yeah.
Typically.
Well,
just see if we
while we're waiting for that to switch over. I can't see. Just tell me when you're going there, Paul. I just want to show you quickly the dollar index before. Are we switched? Not yet. Okay. Here's the dollar index, and curling up, as you can see. So we're no longer short on the dollar, and as you know, we were long on the pound, long on the euro, and we got out of those. We took profit on the long pound trade, took profit on the long euro trade, and as the dollar is ticking up, we need to start looking for a change in direction here. But it all depends on what happens now in 42 minutes time, and the dollar will react to Jerome Powell's comments at Jackson Hole. It always does. The dollar, the euro, the pound, most of the majors will react quite dramatically, I think. And I don't know which way. The way it looks right now, it looks like the dollar's got a bit of a bid under it, and I would suspect that there's quite a lot of volume holding the dollar up at these levels against several of the majors, including the pound, which everyone thought was going to be bullish, which seems to have not worked out particularly well, and the euro and Canadian dollar, Australian dollar, all struggling a bit as the dollar starts to find a footing here. maybe this is the beginning of the next sort of perkiness in the dollar, that we'll see a little bit more of a setback in stocks and crypto, or maybe the dollar's going to roll over. It's all speculation right now. I have no clue. I don't know if we got your charts yet, Paul. No.
Yeah, it doesn't look like we're going to be able to have a look at my charts, so apologies for that. I did have a Doge place. If you're
all right, we're out of time anyway.
Yeah, if you're interested in the crypto setup, which is pretty much ready to go, look at Dogecoin, do some charting, as there's a nice little setup. I will be looking to trade this over the next couple of days, depending on what happens on Friday. And that's it. Look for your setups, get them all ready. Don't enter until you've got confirmation of the news or whatever. But yeah, and just quickly, Robert, thanks for letting me know how you're getting on. That's pretty cool. Still watching and wanting to trade you. I have a feeling, Robert, that the conditions for Solana and trading are going to improve over the next few weeks. And if they do, report back with your trading success. But I think exciting Friday for us today. And we're going to hand over to the rest of the team, which will hold your hand while we wait to see what happens in Jackson Hole. Great to see you, James.
You too, Paul. Have a great day and lovely weekend, everyone. We'll see you next week. Take care.
Take care for now.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, crypto. From Tokyo's early momentum to London's open surge, to New York's high volatility action. We decode every move live, get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is info tradement and beyond. Markets are unpredictable, volatile, complex.
I can't wait for the day where these shots are just real. Mariam, Matt, and I beating each other up. It's gonna be fun.
I mean, like I said, you can just prompt AI and it'll
No,
pretty much
you
be
know,
real.
everybody can prompt AI, but imagine how cool it would be if we did it for real. Some sick slow-mo shots.
Well, I was gonna say, we could,
man. You know.
we could figure out this wedding crasher thing, and we could go crash that wedding if you guys are
Hey.
for it.
I don't know if I can make it in time.
Well, that's
Start
that's
swimming.
that's the thing. Yeah. Well, we're gonna need AI to assist with this one, but we gotta pack up the charts, the live stream here. We'll crash.
Well,
Matt's
you
wedding.
could. Tyler,
Well,
you. How far do you live from Matt?
Oh gosh. Let me look. Actually, he's in St. Louis?
You're basically like a rock throw away.
Markets are
Yeah. I could. If we get a nice flat rock, I could probably skip it.
complex, but your trading
St.
journey
Louis.
doesn't have to be. Hola Prime TV is now live.
All right.
Free trade.
Let's see what's going on, guys.
Join top
Yeah, 8
traders
hours.
as they break
see.
down.
8-hour drive?
8 hours. Well, not if I have a Ferrari or a Lambo. Maybe I can make
Well,
it
not if you
fast.
take a helicopter. Like, what are you saying driving?
To
Like,
London's
this?
open surge.
We don't drive here.
I don't know what I was thinking. See, that's why I need you guys for guidance.
We
'Cause
decode
I'm
every
really not thinking outside the box here.
Get sharp analysis.
Hey,
Yeah,
we
we're
are
just-
on NQ. We are
Insights that
setting up
actually
a
make
nice
sense.
flag here on
And
the
yeah, we don't just break down
5
charts.
and
We
15
crack a
minute
few
charts.
smiles too.
If we
Only
if
on
we look at the
Hola
London
Prime
move,
TV.
this is
This
like
is more than
almost
content.
too clean.
This is info tradement
Right?
and beyond.
Maybe it's gonna be something. Maybe not.
Markets
maybe
are
not.
unpredictable.
Yeah, Nick, you've been
Volatile,
trading like T-Trades
but your
model.
trading journey doesn't have
I
to
actually have. Yeah, I've been learning the fractal model. over the
Lots of
past
stuff at the top here.
And I've been
Join
loving
Kinda
it.
wanna
Like,
go
honestly,
long.
I even have my chart set to white on my other
key
screen.
levels.
So.
That's right. That's right.
Trades across
But now it
forex,
matches the
futures,
T-shirt,
and
so I mean,
crypto.
it's like
From
it was
Tokyo's
kind of always
early
meant to be.
momentum
True.
to London's
But
open surge
I have a nice mix
to
of
New York's
you know
high
dark
volatility
charts
action.
during Tradeify
We
TV and then
decode
white
every
charts on the other
move
screen
Get
for my own
sharp
trading.
analysis,
So
clear
it's good mix.
I'll tell you what, the
and
white charts were a little
insights
bit
that
blinding
actually make sense.
a little bit the
And
last
yeah,
couple of
we
days
don't
for
just
me,
break
so I had
down
to break
charts.
out the
We
broken
crack
blue
a
light
few
glasses.
smiles too.
Oh, that's
And
funny.
just wanted to really lock in, but
I
This
have
is more
them
than content.
laying
This is
around
info
somewhere as well.
tradement and
That's
beyond.
actually a great idea.
I need to get
Well,
like
we
the
can
orange
all
room.
put on our glasses.
Tyler, I really need us to make
Markets
money
are
today so I can shoot the money gun. Okay,
volatile,
so
Oh, great, no
complex,
pressure.
Yeah, no
your
pressure at
trading
all.
journey
yeah, no
doesn't
pressure
have
at all,
to
but you have to
Hola
make
Prime
profits,
TV
otherwise you
is
can't
now
leave.
live.
Hey, listen, even if
Every
stop losses
trading
get hit,
day.
there's still somebody on
Join
the other
top
side of that
coaches
making
as
money.
they break
You know,
down.
No, we're only
Real-time
talking about us.
setup.
we don't care about those guys.
Yeah, we don't care about other
We
people.
don't care about other
perfect.
people.
Futures and crypto.
Yeah, we want their money
From
actually.
Tokyo's early momentum
Well, that's what trading
to
is in the end,
London's
right?
open surge
It is.
to New York's high
Yeah, you know we're
volatility
not curing
action. We
cancer over here.
decode every move.
Hey,
live.
Paraloco.
Get
What
sharp
is
There's,
going
analysis,
on
careful with
today?
fractal model. It's a rabbit hole. I
and
got screwed
insights
after
that
getting into
actually
that.
make sense.
Well,
And
I have
we
not.
don't just
I don't know
break
what
down
happened.
charts. We crack a few smiles
I
too.
like it. I really
What
like
on
it.
Hola
what
Prime
could you
TV.
like just like a couple
This is more
sentences?
than
What is the
content.
fractal model
This is
technically? I mean, I know
info
T-Trades
tradement
is
and
more of like an ICT style trader.
Yeah.
But what is the fractal model? Like what
Markets
specific
are unpredictable,
confluences are you looking for when
volatile,
you're taking it?
We're
complex,
basically looking for
but your trading
point of
journey doesn't
interest,
have
like
to be.
you always do in
Hola Prime TV is
in
now
ICT, I
live.
think, generally, right?
Every trading day.
But
Join
mostly
top
focusing on
coaches as they
reverses.
break down.
So, for example,
Real-time
let's say you
setups,
have
key levels,
the London
live
high
trades
here,
across
right,
forex,
at
futures and crypto.
23,280.
From
Um,
Tokyo's early momentum
My time frame that I trade the
to
fractal on
London's
is
open
the
surge,
H1M5.
to New York's
Also, I gotta
high
keep
volatility.
an eye on the clock here because
We
in 55
decode
seconds
every move
the market will
live.
open.
Get
So
sharp
what you would want to
analysis,
see
clear
is
strategies, and insights
candle,
that actually
this one
make
for
sense.
example,
And yeah,
take
we
out
don't
the
just
London
break down
highs
charts.
and then
We
close
crack a few
back
smiles
inside
too.
the range,
Only
right?
on Hola
then
Prime TV.
then make a
This is more
change
than
the state of
content.
delivery
This
in
is
that
info
1 hour
tradement
candle,
and beyond.
and then trade the next candle and expect expansion to the downside in this case, or if you take out the low, then obviously expansion to the upside. That's like the very, very short summary of it.
Yep. Are you entering off of a specific time frame? 1 minute, 5 minute?
Yeah, like 1 hour, 5 minutes.
Oh, gotcha.
So the candle 2 closure on the 1 hour, but then the entry in the 5 minutes. And change in state of delivery on the 5 minutes as well.
Yes, sir. I like it.
If I see one today, I'll let you know and break it down. But let's get into market open in 5, 4, 3, 2, 1.
Ding ding, motherfuckers.
I love it.
You guys had that on audio. That's crazy.
Actually, shout out to Leia, one of our OGs. She had that on.
Wow.
Good morning, everybody. Good morning, Coach Tony, Coach Paul, and Coach Daryl. I must say, whoa, that's an improvement. Is that a new camera you got there?
It is. But I have to fine tune it, so I'm gonna do some stuff over the weekend. But yes, it's a new camera.
Very nice. I think also
I don't
Daryl,
even have
your
my light.
microphone's not working. I think it's like your basic microphone. Yeah, but it doesn't sound like it's coming from here.
Oh
Sounds
yeah,
your
there's like
computer
that.
mic or something.
Yeah, that could be true. Yeah.
It's all right.
How's everybody doing?
Well,
Pretty
not
good.
bad, not bad.
Pretty
Anyone
good.
been trading?
I have not.
Traded the
Right
overnight.
now. Nice.
Overnight was a pretty
Yeah.
pretty
Trading.
interesting one. That's for sure. How many scalps have you made this morning, Sam?
0 at this moment in time. I had a very
Oh,
busy
no.
morning, so I haven't managed to do any trades, but it's fine. We'll do some in this session. So we got Jackson's Hole.
You.
Finally.
You guys,
The
my microphone should be
slew
working.
It's,
of
No,
Very strange.
I think
I mean, it's not the end of the world.
when you
Daryl,
just
but-
pointed your voice, towards the mic, it didn't change anything. It sounds like it
Tap
might
it.
be coming
Yeah.
from maybe
The camera.
the
Your
camera.
Yeah, headphones.
Yeah, camera
Camera,
microphone.
yeah.
I sorted all this out. All right. Anyway,
You know
That's
you'd
all
have
right.
to do you'd have to change
Question
it in
that I
your
had for-
default computer settings. Yeah.
yeah, I'm in there. I'll get to it. Do you guys think we should stream Powell?
Oh, yeah.
here? No.
I think so. Yeah.
Yeah, why not?
Yeah. I mean, it is
Yeah.
one of the more important speeches, and it's probably his last major economic speech as a sitting Federal Reserve chair.
Could be his last whatever.
Yeah. I mean, literally, he's either done by May of, I think it's May 2026, or before that.
May of
So
2026,
we'll see.
Right.
Yeah. But I mean, hey, it's good.
Say goodbye to
Futures
Ryan.
pointed higher, which is okay.
Yeah. I mean, all the slew of headlines that have come out from Fed's Collins is hilarious, but just like kind of just pointing out all of the obvious, but then contradicting himself a couple of times. But yeah, I think it's making a little bit of juice in the market. He's given headlines for a little bit of a pre-juice in the market before we get to Powell's speech, I think. So that overnight swing down and then just absolute rip back up is an interesting one for sure. If only we were trading at 2 a.m. Eastern time. But
Just want to mention to everyone in the chat that we are giving away a $25,000 challenge account in this session. So, most of you probably already know the rules, but just to recap real quick, you got to make sure you're subscribed to Hola Prime TV. That's this channel you're watching the stream on. Also, our main channel, Hola Prime. Head over to Instagram, give us a follow as well, Hola Prime TV and Hola Prime Global. Leave a message or a comment of some sort in the chat. And lastly, but not least, and this is very important, make sure you have your email address in your YouTube bio, okay? it's not there, you cannot be entered. So go ahead, do that now. We will be announcing it in this session at some point. So good luck to everyone. $25,000 challenge account will be given away.
Nice. Good luck, everyone.
Robert asks, do we get in 30 days or just never again? I'm not sure what you mean by that. Do we get in 30 days or just never again?
You start trading 30 days from
any
now?
of you guys?
Maybe he means can we qualify to win again in 30 days or something?
Oh man.
Yeah.
I don't know. Robert, clarify what you mean exactly.
Let's see.
Oh, the giveaway.
Man,
yeah. I think once you've won, you cannot win again. But I can run it past the team, see if there's maybe some sort of reset or something after 30 days.
Yeah. Sam wants to win.
Oh, this is open. Exactly. I want to win it.
Yeah, don't worry, everyone. The coaches are not entered into the challenge, so just improve.
We're not eligible.
What you guys don't know is that I have a YouTube channel called Robert Mashiro. And,
That's
great.
You're the #1 subscriber. There you go.
Exactly.
What a twist.
Oh man. Let's see. Think it's gonna be another day of chop here?
Well, this is a boring. Yeah, this is very choppy.
I don't think it will be a day of chop.
Could very well be a range.
Probably
I think
just
when
until the
Powell
Powell
speaks, it's gonna open the lid.
Yeah.
Break one way or the other.
This is from last night, guys. This is from last night.
Jerome Powell.
This P&L just to get ahead of Tony or anything.
All right,
here we go.
Very
I knew you couldn't sit on your hands, and you had to claw it back.
You know where I got that? Paul, you were in quiet markets, and I was trading, but I was trading that down leg, and I wish I had gotten the rip, but I was already in bed.
Very nice. Very nice.
But I came in this morning, and I'm like, "What the hell? Look at this reversal!" Like, what?
Yeah.
I have to go back and look at the. I have to look at the.
There's some
the news, because something must have come out
trades
to cause this total reversal here.
Yeah.
Okay. Robert says he won the Instagram one and did one. Okay, no problem. Robert, I'm going to pass that on right now to the people responsible. Are you saying you didn't get your challenge account? You entered the competition on Instagram, won, but didn't get it? Is that what you're saying? If so, don't worry, my friend. We will get that sorted ASAP.
Yeah. Definitely.
All right, so this is just we're just sharing my screen just to get some show some activity here. This thing's been really having some movement here since we've opened. We just opened, obviously, so we've got this big leg up continuing. This is a 5 minute. I need to really, I like to go down to a little 1 minute or 30 second if I can for the day, just because I don't really trade with candles. But this is just giving the viewers an idea of, oh my gosh, what we were talking about. And Coach Paul and I, we did, you know, all of us do this actually whenever we're on the prime markets recap for the day. It's kind of like, you know, what do we expect in the overnight?
Let's see what's going on.
So we were obviously,
All right, Robert, I messaged the people in charge. We'll get that sorted for you, okay?
Where's my trash? There we go. Okay. Yeah, so we were, you know, we closed here, and this profile that I always put is the full session So 5 o'clock Eastern, 2 o'clock.
Order filled.
Pacific for
Going
me.
in
So
queue.
This goes and shows you everything, not just where we
Uh-oh.
ended up, but the last final hour of settlement.
Uh-oh. No.
And it was like, what are we gonna do, right? So what did we do?
It's
We kinda
ranging.
came down. We went all the way down there. This blue line was yesterday's low of day.
Get up there.
Traded through that. And then we just came
Don't do it.
And then what do we do? We've gone beyond even. Well, we didn't do it in the overnight because this is the overnight high. We almost did a full range in the overnight of yesterday. Almost did it. But now we're sort of outside of the edge. Very interesting.
Connection lost.
And of course, we had an engulfing. But it
Of
wasn't
course the
engulfing
connection
fire.
lost. What is going on? Like it.
Yeah.
What was this? This was Wednesday. Yesterday was Thursday. I got my days all mixed up. Yeah. So interesting to see what happens. And again, to your question, Tony, what can we do? I don't know. I don't think we're just going to chop around. I think we're going to either continue up to the upside or we're going to maybe just fall out.
Yeah.
The market kind of coiled yesterday waiting. That's just how I see it.
Order
It's pretty
filled.
funny how we're just like jumping here. Like everything is just looking massively bullish. Everybody's just super excited. There's no issues.
Exactly.
No issues at all. We're not between a rock and a hard place with inflation and employment.
Oh, I guess I should have kept
all
it.
companies are doing fantastic.
Happy days are here again.
Blah 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 blah.
Ridiculous. It's totally ridiculous.
It's a good $480 trade though.
My mic. I gotta get my mic straightened out. I had it worked out last night because I tested it. But I think
Good 400.
I gotta get. I had it last night. But I shut my computer off and when I turned it on this morning, I think something happened.
Yeah, I think it's like I said. I checked the default microphone settings on your computer.
I'm gonna take
because with the call that we're on now,
Did that
it's
do
not like
anything?
Zoom. Like you can't.
No,
try again.
it didn't do anything.
That is the setting.
No.
Oh no, I would have definitely just killed it.
Good
right
thing is
there.
I can still hear you clearly, relatively speaking. So it's,
Yeah.
You're hearing me on the camera. Yeah, it's picking up on the camera.
Yep. What kind of camera did you pick up? Sony?
Yeah.
I got something similar to what Sam got. It's a Sony
ZV-10?
Yes. That's exactly what I got.
Yeah.
With a custom
I got that.
custom lens.
Very nice.
Right under the lens for it.
Nice. Yeah.
Oh, that's why it looks so good. Got the custom lens.
I wanted to get the faded back, so I got like a 16 millimeter by I don't know anything about cameras, but I YouTubed a little bit.
Yeah.
But someone
Guess I should
recommended,
have kept that in. I think we would be.
Yeah, it's the.
Close to 1,000 right there.
Yeah, I got the ZV-10, but I never hooked it up to the computer here. I'm using this webcam thing, and you can obviously tell.
Yeah, I was doing the webcam.
And maybe I don't. Maybe I
Webcam
don't want to
doesn't
be
do
shot
enough.
in high definition.
I was worried about that. I was worried, to be honest with you. I'm like, I don't think people want to see my
4K.
whole freaking face.
Yeah. I guess it's not high definition anymore. It's 4K, cotton 4K.
yeah.
Cotton 4K.
God. Let's see here.
Holy moly.
Long just a little bit in my cash account, $400. Wanted to see more of a push, but it is what it is. Got 1 minute left for the 15-minute opening range. And I hate saying that. I just did it in my cash account, didn't show anyone, but we'll get some trades out here, chat. And again, we'll get you paid. Thanks for tuning in. Came to the right
Generational wealth.
place. yeah. We're making generational wealth. Don't worry.
You gotta do what you gotta do.
It's Friday. Yeah, it's Friday. We've had actually pretty successful Fridays, I think, all across the board. You know, each one of us, it seems. Even if there's, you know, impending critical news. But
yeah, I think it'll be a good day. I think it's gonna be a good day.
Yeah,
Nicholas.
Even if there's critical news.
I think it'll be a good day.
I
Good to see you.
Want to have a position.
Nicholas.
How do I sound now?
Cool people in the chat.
Same.
Still the same.
Same? Damn, really?
You might have to re-enter the chat for the new settings to be.
I may have to reboot the computer, but I'm not gonna do it now.
Yeah. I mean, it's fine. It's just obviously not coming from the mic.
Yeah. Okay. What we'll do is we'll just keep it like this.
Wow. Well, the ES just ate through like 1,400 contracts at 64.24, and it's just continuing to the upside here. We are cruising. I mean, there's no resistance. It feels like in sight. My goodness.
I know it's ripping, man. Now the question becomes:
get out.
Go long or go home.
Yeah.
What's going to happen if we get up to the 64.30? I mean, we don't have far to go in the ES. If we get up there, that is the high of Wednesday. That was Wednesday's high. And will we get any reaction, or we just keep marching through? I don't.
Which is also the point of control of Tuesday. So Wednesday's high was essentially the point of control.
Just gonna say.
Yeah.
Yep. Point of control. I'm looking at it right here. Exactly right. It's funny
how those things works out. Yeah.
Inside.
You know.
Yes.
It's almost like we know what we're talking about or something.
Do we though?
Don't think we do. We're just making it up as we're going along. That's what all traders do. Just make it up.
It sounds good to me.
Exactly.
Reefy, Sam's going for 20K today. I mean, Sam, Tony, Daryl, I think all three of them are going for 20K.
Love that.
I'm gonna try. I'll give it a go as well, but sheesh.
I am in a long right now. I entered on that massive pullback. I'm still holding it. I'm still holding it. Still holding it. Getting absorbed. I'm out.
You're holding what?
$793.
There you go.
There we go.
Beautiful. All right, let's get the link for these boys. Let me get the link if you see it.
Man, I should have taken out my cash account. Yet to trade the cash account. We'll switch over to my cash account. Hola Prime account's got 800 on it. It's not bad.
There you go.
Let's go to the cash. Do alternating trades. One cash, one Hola. One cash, one Hola. Let's just hope one isn't good and one isn't bad. One isn't good, one isn't bad.
Yeah, I know, right?
One account's gonna get destroyed.
Let's see here.
I wonder if you can get custom software for Project X. So if I enter on the Hola Prime account, it can copy over. I know you can do copy trade within Project X, but my cash account obviously isn't Project X. So I wonder if you can somehow copy it over to a different platform as well. And so that would be amazing. That'd be great.
We shall see.
Otherwise, I could do it on my mobile enter. That's just too hard. Like entering one on the phone and on the computer.
Yeah.
10 a.m. Robert. Speech is at 10 a.m. Robert.
Yeah.
Yeah. 10 minutes.
I got the link right now. I just found it. I was trying to find a better provider. I got CNBC here, but there's so much other smaller ones. I was looking originally for like a see if Bloomberg or some major one was doing it, but this is good. So let me...
Robert, if you remember, if you can find what it's called, please do leave it in the chat. That would be fantastic. Thank you.
They're going to use this as a target for people to start getting bullish here, and then they're going to make it look very strong, and then they're going to reverse course on here really quickly. If we see a reverse course really quickly, I'd like to wait for a refill.
Yeah, again in the cash though. I'm actually waiting on the back end team to get my direct account set up.
You know, kind of those efficiencies are left behind.
So okay,
nice.
so
enter a short trade.
$700.
Right now we're seeing
borrow your brothers.
in this area, so there's a good chance we do get a
Yeah, well, there's no account to borrow with him, you know, because they're already shot to hell. You know?
He blows it in 30 seconds.
More like a trap, or is this just a liquidity grab to continue higher? Both are probably
We'll see if he's out there. Drop that little bomb on him.
Back up to this POC.
Early morning.
Point of control.
Tiger says
He'll react.
Bloomberg.
But this
Errol.
place once the market
Tiger
goes.
says Bloomberg has been streamed. Find it.
Show you guys what
I didn't see it in Financial Juice yet, so I went on YouTube and I was just looking.
But then it comes back, taps this maybe point of control here, or maybe even taps the.
I think I just sent the guys to CNBC.
And then finally gives you that real move to the downside. That's one possibility. The other possibility is that.
And I know we're showing my charts right now, but
We're gonna bounce in
you know,
here.
again, for everyone in the chat, it's just, you know, white lines at 15-minute opening range high, opening range low. Little blue dash line is that previous day's close on the NASDAQ. And then the green line that you see at the high is going to be the first standard deviation move to the upside. But I expect like not much to happen. There's going to be a lot of volatility in the next 8 minutes. So I'm actually just going to jump into the charts. Anyone else want to show their screen for a couple minutes?
Yeah, it's 9 a.m. my time.
Yeah, we can.
Yeah, I'm gonna still
show mine. I mean, I'm also I'm not in a trade or anything, but we can just show mine for the sake of showing them. I'm going to be looking through a few different eggs at the moment. Going to look at some soybeans. Going to look at some
we have 2 4-hour
live cattle just for the next few moments.
The trading session. There's one at 2 p.m. and then we also have that one at 10 p.m.
Paul's loving the soybeans.
Loving it all, man.
No, it's 10 a.m. my time.
Trade whatever I can.
That's right.
I love how when Tony talks on the phone, he covers his mouth.
286 is a target.
Yeah.
You can't lip read. Everyone, any lip readers out there, let's start lip reading Tony's conversation.
Through the small inflections of his.
I must be late to that. I don't know why he does that, but I never got why is it like some emergency call or something he gets? Or,
I like 286.
Oh yeah. He's
assuming it's private.
Yeah. Yeah.
28.
Robert, can you drop in a chat what that's called? If it says Project X coming soon, that's fine. I can wait, but let me know what the
360 says
software's called. Cheers.
I think we end up getting 360.
Cheers.
She got spooked.
Cheers.
Oh, Chinese guys already. He's working over.
Cheers. Cheers, Mike.
Oh, Chinese guy.
Cheers, mate.
Chinese guy said, "Oh, I'm gonna get him."
I think Cheers is the one thing that I actually have somewhat adopted. I don't want to be like, you know, a copycat of any sort or anything, but Cheers is the one thing I do like to say Cheers every once in a while. Like I genuinely Americans don't say cheers,
stop
but I
talking?
do love saying cheers. So
10 a.m.
that is one thing I have
You
definitely.
just want to sound. You want to sound high society. I get it. I get it.
Pinky out.
You want to exactly. Do we have the pinky?
Cheers.
There's a lot of people that say cheers here. I mean, Southern California's got every culture in the world here, so it's such a mix. There's everybody here, so I get a lot of cheers. And you can tell where people are from by what they say.
So the Trader straight to funded account that I bought the other day. For some reason, they have
fine.
given me Tradovate.
You can say cheers,
but I asked for Project X.
It's a good word.
No.
Solid word.
I'm waiting for them.
Known worldwide.
What I have to do. It
It
sucks
is.
because I was really wanting to trade that account today.
All
But
right.
I do
here.
have a Bionox account
Let's see.
that I can trade with you guys today. And I have this Tradeify that I'm trading right now.
Yeah, at least we're hovering around the
Jones, are you
opening range
trading?
high. So maybe the market wants to
Bad
go
candles
up.
in 5 minutes.
Maybe.
5 minute.
Yeah, the Dow wants to keep breaking
get all
through
this
here.
in.
Because that's what I'm seeing.
Yeah, I know. Or we're just giving a little bit of a buffer for a massive dump.
That's my
Exactly.
worry, honestly.
We've all,
I mean, that is.
that happens all the time, though. It happens all the damn
Yeah.
time.
Yeah.
It's just.
Yeah. Man.
Thank you, Robert. By the way,
$400 on this Tradeify account.
much appreciated.
We need
Got it written
another
down.
750 to pass. You guys think we can hit 750 today? 750 more?
All right.
Sounds easier. Jones is British.
Yeah, and for anyone that has any open orders,
said than done.
again, just be careful. If you're just tuning in,
Be careful.
we got Powell.
Be careful.
Yeah. Oh, we got Powell in
be-
about 4
better be
minutes, and
careful.
you can expect a bout of volatility for sure.
I've got
If you didn't know,
I've got 15
Jackson Hole
contracts
City-
sitting.
5 minute on the
Mhm.
15 contracts
You
right
gotta
now.
limit.
He's
You
got-
gotta limit my.
He's ready. He's ready to.
previous day's close.
We got nothing but bullishness here. High volume, high volume, high
I'm
volume.
YOLOing
absorption,
it.
High volume absorption. Like,
It's gonna have to go up or down. One of them will be right. I'll just
is that what you
flip a
got
coin.
Yeah.
I might
I mean,
break
I'll
all
do it.
records
on the YM?
or I lose an account.
Oh, we just
Who
can
got
do it.
36.
Do it in
Thank you.
the practice account.
That's terrible advice, people. We're joking. We're messing around. We would never do such a thing. It's called gambling. We're not gamblers.
Yep.
We're professionals
Exactly.
for the most part.
So mucho bueno.
Yeah, for the most part. We are professionals. Do we act
professional
professional? Nah.
Debatable.
I have the resume. Let's see here.
Daytraders.
Debatable
like
whether
getting
we act
Daytraders.com
professional.
is the company that the
Getting
ex-
mentally
of,
prepared for this, like,
of,
you know,
Apex
bad
went
news
to.
comes out and
The
immediately
guy Leo.
you have to like get
That's
short
his
because
company.
the market just starts moving, you know, like gapping down of sorts.
He's
You
the
know,
guy
you
who
start moving
created
down like
their,
5 points at a
trading
time.
platform
Got to
where
get
they're
mentally
trading
prepared
moving
for
down.
a possible
Their
quick in and out
back-end
scalp
system.
here.
Leo.
The
You guys
next like
remember hearing
15
about that?
minutes.
He said we got way past 286
Alright, we've got 2 minutes until
to the.
till Jackson's until Fed Chair Powell.
We got a lot of good options right now. Laughter. We got a 50.
Jerome.
Scores.
No active
Scores.
Jerome
Good to
boy.
see ya. Get
I'm.
get
I
ready.
am.
We got a pretty decent lineup, man. And that's another day.
I know you guys call him Jerome
Ready for,
Powell. I call him
Powell's
J
first
Powell.
Good morning.
J Powell.
Once you're in
Oh,
with
nice.
society and
When you see him on the streets, yeah.
your buddies, exactly. Like when I call him up, I'm like J Powell.
Yeah, yeah. When you see him at the Oxford Club.
Once you're in the club, that's it. Once you're in the club, you know you get those special privileges. But if you ever meet him, address him properly, all right? You haven't got those
Yeah.
privileges yet.
Well, I'm in the inner circle of the club, so I call him JP. We call him JP for short, from J Powell. So.
Yeah.
You're not there
It's a
yet.
nice
It's
club
okay,
to be
Sam.
part of, to be honest. It's
All right, so
it's
we
fine.
our idea this morning.
I'm working my way up
we
there,
hold it long enough,
bit by
obviously,
bit,
but,
you know.
overly well.
Call
Looks like
Trump,
we got
Donny.
a huge move here.
Elon, I call
I'd like to see.
Elol. That's his
Now I'm a
nickname
little
for me.
confused because now we've got some imbalances to
Call him the Rocket Musketeer.
to the downside here. So do we come, we fill them, and then keep moving down?
Honestly,
Or is this the
wouldn't be surprised if
liquidity
some
grab that
people
it
call
needed
them that
down
in
to
real
be
life.
and now we pump.
Rocket Musketeer.
She's getting bumpy. Did Pal say something already? Wow.
Scores, good to see you.
Oh.
How are you, my friend?
All right, we were. Oh man, what's going on?
You scored any good
Oh, thank you. What
good
did you
trades?
do? We did it with honors.
All right.
We got our answer.
Let's see if we can get the stream up. Bloody hell.
Easily.
What the hell just happened?
Oh my god.
Nothing's It's even started speaking. What the hell, man?
I swear he hasn't started speaking.
Oh my goodness.
What's going on, Eagle Eyes?
Good
That
morning.
was insane.
And then immediately.
Literally. Just the anticipation of the speeches caused that. That's wow.
This is crazy.
What can you do, huh?
Gold went straight.
And that is exactly why you shouldn't be trading right this minute.
So which one of them is lying?
Yeah.
Gotta let all this craziness happen. You do not want to be caught in something like that. I mean, how many points?
40
That's
points.
insane.
40 points
Probably
in
one of the
the
biggest
ES.
moves I've seen in a while.
Straight.
Closing it in on 200 in the NASDAQ.
Remember I told
Yeah,
you guys to
200
look
now.
out for 550 to 600. It looks like we're going straight.
Gosh.
200 points in one candle.
All right, let's go long. Full port right now.
Just a quick,
That's insane.
just a quick $4 grand for one mini.
I don't know. Nothing can go wrong.
God.
What's the
On the-
ATR
on
now?
the
Yep.
34
Goodness.
Can you imagine?
ATR is 34 in the 1 minute, guys. The VIX is dead, says Joey. Next level is 525, says Eagle.
40 grand for 10.
Pull back, full port. Let's go, Joey.
I can get with both numbers.
Right now, the trend.
Let's, can we
Dang,
pull
I
up
should have
that-
put those
I'm gonna-
trades in on the,
Can we
all
pull
of
up
my
that stream now? or-
props.
Trend is really trendy right now. 1105 micros is left though. Come along for 272 contracts. What? You are? Eagle Eyes? What a level. What kind of great level, my friend?
That was an insane move. I've never seen anything. Well, I have, but you know what I mean. That was well and truly insanity.
Sorry, I was actually
All
talking
I see is-
and my microphone is muted.
No, that's
well,
fine.
all I see is
All
on
good.
Bloomberg Television. Says Powell says downside risks to employment rising. So I guess that's making the market just spike upwards. I don't.
I know, is that positive?
That wouldn't be positive to me.
What did you make on that, Eagle?
Yeah.
Well, I mean, even recall yesterday, the who was it? One of the Fed speakers was saying that
200 points.
inflation was it inflation is a bigger risk to the economy rather than the AI taking jobs.
Yeah.
AI and automation sucking jobs out.
You were long from 273.
And of course, like no one likes to talk about inflation anymore, but
High of day. Missed out on
it's
lows.
still around,
Missed
still
out,
present.
Just better off trailing it than taking it.
Yep.
The
Oh,
PPI
yeah.
numbers.
Definitely is.
Oh, the man is talking.
We
Man. Dude. Oh yeah, he's talking now. By the way,
yeah.
if we can get
Suppose
that
that,
up.
Can we get the stream up back end? Back end, can we get the stream?
When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policies. There is significant uncertainty about setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2%, and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months, with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate.
So we're
Our
trying
policy
to get
rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations, to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the make-up strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually. Counting a couple of virtual appearances during the pandemic, this is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. the Kansas City Fed was very wise to lure Chair Volcker here to this national park
Order
more than
filled.
40 years ago, and I am so proud to be part of that tradition. Thank you very much.
Stop filled.
At the same time, the balance of risks appears to be shifting. In my remarks
Boy,
today,
did I mess
will
that
first
up. Why
address
is
the
that one
current
so
economic
high?
situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework as captured in the revised Statement on Longer Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point.
Order
Our
submitted.
policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was
Order
appropriate
filled.
to help bring down inflation and to foster
Stop
a
filled.
sustainable balance between aggregate demand and supply. Inflation had moved much
Order
closer to our
filled.
objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished.
Freaking hell,
But
man.
the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over
All right. Well.
All right.
Okay.
Well, yeah.
That was
Well, it's
amazing.
relatively
Stop, Phil.
dovish. Relatively.
Pretty rosy.
Looks like we are probably going to be getting a cut. It seems. So.
Yeah.
I think the
All right,
Fed
we're
Watch
getting a
tool.
rebound back to
I'm
the upside.
pulling it up now. Back to 91%
wild
chance of a
ride.
cut.
What a wild ride.
This upcoming month for 25 basis
Huge pump to the
points,
upside,
and
then
then
followed by a.
I think
looks
we're
to me like
pricing
a
in 2 cuts again by
140 point
December.
pullback.
Yeah, 2 cuts
Now
of
we're seeing,
25
a
by
little bit
December
more of a
again.
move to
So
the north.
interesting stuff.
Sure, we'll find out.
Very interesting.
A lot
Good
of
watch.
nothing. I don't know if anybody retained anything that Powell said there.
All right. Well,
Trying to work
back
on
to
my
trading.
strategy.
Market is still crazy.
But I'll figure that out.
Yeah.
So
1 hour candle.
I
is
just can't imagine it will
the
ever calm down. To be
15-minute
honest,
is very strong still.
Yeah.
Yeah.
20 minutes is
Gonna
kinda
remain.
their flag.
It's just crazy right now.
I mean, today might
Of
be
course,
one of
during
those
the
days. when
during the Powell speech, you got Trump making headlines again, talking about firing Fed's cook if she doesn't resign, talking about Putin and Zelensky. So you just getting a conglomeration of a bunch of just stuff, man. Today is going to be a wild one.
Nice little pump before the
It already
low,
is a
says
wild
George.
one, but
Well,
Yeah.
Hey, Pecos.
Oh, I still had it, guys. I still had it. I could have brought that back.
Eagle Eye's making money.
Ridiculous.
Chris was Coach Chris was able to take some a nice trade on gold earlier. He was able to get that huge run up on gold. Made a ton of money, so congrats to him. It's awesome.
Yeah, well done, Chris.
Order filled.
Really well.
Is this going to be the rug Pullington?
Chris the man. Smash
Stop filled.
what we want to see.
Yeah, my Renko chart is not even working. Renko chart hasn't even moved. Do you guys notice that? You guys haven't even said anything.
Let's see here.
Renko chart wasn't even moving since 8:30. What a nice
Yeah, we're probably gonna have to wait for some of this stuff to shake out a little bit. I mean, unless we come back and start making the new intraday highs, then I mean, I'd look for a little bit of a continuation trade. But I mean, we'll see, right? They're probably going to be doing some interviews with some people, and then there'll be a bunch of smaller headlines that come out just from these back-end conversations or these little quip remarks that happen out there. So
Renko got wrecked. Yeah.
still need to watch the tape, watch the news feed. Be careful.
Right now the market is kind of choppy.
Oh, 100%, yeah.
I'm not sure where she might be headed in the short term. I don't see any obvious.
Okay, has my sound improved?
On this
No, unfortunately not.
On this bull flag looks pretty good.
No?
Order filled.
got offline and rebooted the whole damn thing.
It's all good.
Eagle Eyes is gonna make.
Well, you can hear me at least, so that's fine.
If anybody can do it, he can.
That's true. That is true.
Maybe you don't want to hear me though. That's the point.
Yeah, let's mute Daryl.
Eagle Eyes is already done on that match. So
Give me the up, please.
Reefy said he longed gold as well. So, couple we've seen now long gold today and take advantage of the news. Congrats to you guys. That's a difficult one to do. Got to be on it early, for sure. Now we're in an area of where,
a lot easier to backtest than to use during
it's probably best to let things play out a little bit. Could get like sliced up here at this point, but if you're able to catch the early move, I mean, good on you. That's for sure.
Stop filled.
I think we're gonna have to have another flash. You think they're gonna have
Yeah. Oh, show.
Chris locked himself out using that Project X feature to make sure that he keeps all those big gains. Don't blame him. I'd lock myself out too if I was up as much as he is.
Oh, 100%. That's what you have to do. You have to